Filing your tax return for the first time in Canada can feel overwhelming, but don't worry. Once you understand the process, it becomes much more manageable. Let's walk through it step by step. Step 1. Determine your filing status. First, ask yourself, are you filing as an employee, a self-employed individual, or do you own a corporation? If you're an employee, your filing is usually straightforward. If you're self-employed or incorporated, your tax situation becomes more complex and requires additional planning. Understanding your status is critical because it determines which forms you need and what deductions you're eligible for. Step 2. Gather your documents. Before you start filing, make sure you have T4 slips if you're employed, T4A if you received commission or contract income, T5 investment income, rental income statements, business income and expense records if self-employed, RRSP contribution receipts, tuition slips, T220, childcare receipts, medical expenses, donation receipts. If this is your first time filing, organization is everything. Step 3. Understand important deadlines. For most individuals, the tax filing deadline is April 30th. If you are self-employed, your filing deadline is June 15th, but any tax owing is still due April 30th. Missing payment deadlines may result in penalties and interest even if you file later. Step 4. Know what you can deduct. Many first-time filers overpay simply because they don't know what they can claim. For example, home office expenses, vehicle expenses for business use, professional fees, interest on student loans, RRSP contributions, eligible moving expenses. Tax filing isn't just about reporting income, it's about planning properly to minimize tax legally. Step 5. Decide how to file. You can file yourself using certified tax software, use an online filing service, or work with a professional accountant. If you only have a simple T4, DIY software may be sufficient. However, if you are self-employed, incorporated, have rental properties, or are planning major life decisions like buying a home or sponsoring parents, professional advice can save you significantly more than the fee. Final advice. Your first tax return sets the foundation for your financial record in Canada. It affects your future mortgage qualification, government benefits, child benefits, GST credits, and even immigration applications in some cases. Tax is not just compliance, it's strategy. If you're unsure about your situation, especially if you run a business, it's always wise to seek professional guidance. With over 17 years of Canadian CPA experience, we help individuals and business owners structure their taxes properly, avoid CRA issues, and plan ahead, not just file and forget. If you found this helpful, subscribe to our channel for more professional tax and business insights.